Good afternoon, folks. Andrew Schartenberg here, your mortgage engineer. Today is Wednesday, February 16th. I'm here with your rate report and homebuyer tip of the day. Today, interest rates are pretty much largely unchanged, up just slightly. And where we're seeing rates today on the conventional Fannie Mae and Freddie Mac 30-year fixed loans, 0-point perfect scenarios, you're talking 5% even. Yesterday it was about 4.875%. Today it's at 5. The FHA and VA government loans, again on 30-year fixed perfect scenario 0-point loans, you're talking 4.75%. So again, those are largely unchanged. The yield on 10-year Treasury notes, which again is a common benchmark to see where mortgage rates are going as an indicator, is at 3.62%. So again, largely unchanged since yesterday. The economic data that came out today, which affected bond trading and mortgage prices, was choppy to a little bit negative for mortgage prices. Housing starts looked like they were up significantly, about 14%, meaning new homes that are being built in the month of January, though housing permits for new construction going forward were down. So that seems to lead us to believe that you're going to be seeing less new housing starts in the coming months. The producer price index, which is a inflationary measure of the economy, basically the prices that producers across the economy pay to make their goods, that was largely unchanged, or came in, I should say, where analysts expected on the headline numbers. But if you look at the core data for that, which is the much more important reading, it was actually up a little bit, which is negative, meaning that there's inflationary pressures across the economy. That is not good for bonds and mortgage pricing. And lastly, industrial production was down, and that was unexpected. So that was a little bit of a good news for bonds. Tomorrow we have the consumer price index coming out, and basically the overall trend to this is that most of the data we've been seeing has been neutral to a little bit positive, meaning that that's why we're seeing rates in the high 4s and low 5s. To see a decrease in rates, we're going to want to see a lot of negative economic data come out. So that's it for rates today. Your homebuyer tip of the day. For those of you folks that are out there shopping around or looking to purchase a home and you're going to be using FHA government financing in April, on April 18th, the annual mortgage insurance premium is set to go up. Right now it is at 0.9% annually of your loan balance, and it's set to go up to 1.15% on April 18th. So if you're looking to purchase a home and you're using FHA financing, you're going to want to get into contract and get your FHA case number, which is what your loan officer will pull. It's the tracking number for your loan in the FHA system. You're going to want to get that pulled before April 18th or risk having your premium go up quite a bit. That should translate into increased mortgage payment for you folks of about an extra $30 a month. So while it doesn't seem like a lot, FHA had raised their premiums last year as well, and we're up significantly from a year ago where you saw the mortgage insurance premiums, and it definitely has an effect on your monthly budget. So that's all for today, folks. Make sure you talk to your real estate and mortgage professionals for guidance, and as always, my contact information follows this if you ever have specific questions. We'll see you tomorrow.